The top diplomat in Berlin said China must, urgently, find a solution to promote trade relations with Germany. To boost trade ties with Germany, China must urgently address numerous issues, including its strict travel and quarantine restrictions and differences in values with the European Union, Berlin's acting ambassador said on Tuesday. Travel and quarantine restrictions are two of the difficulties in various directions faced by China and Germany, said Frank Rueckert, who is currently Germany's top diplomat in China following the sudden death of Ambassador Jan Hacker in September. China's commitment to opening up its markets is also an obstacle, according to Rueckert. There are uncertainties about risks and potential disadvantages for foreign businesses and global trade that weigh on the business environment. Frank Rueckert: We urgently need to find pragmatic solutions to facilitate mobility between China and the European Union. European societies are increasingly driving for sustainable value change, and it's clear that differences in values, particularly with respect to fundamental human rights, come with negative commercial impacts, Rueckert said, who was speaking at an event in Beijing marking the release of the annual survey of business sentiment by the German Chamber of Commerce in China. There is also the uncertainty surrounding the promise of opening up the Chinese economy and what that will hold in the future, he said, pointing to the framework surrounding the nation's dual circulation strategy. There are uncertainties about risks and potential disadvantages for foreign businesses and global trade that weigh on the business environment. Rueckert also noted a lack of commercial flights between China and Germany this month, as these have all but ground to a halt outside chartered flights arranged by Berlin for Chamber of Commerce members. What is China's dual circulation strategy, and why is it important? China was Germany's most important trading partner in 2020 for the fifth consecutive year, with traded goods worth €213.2 billion in 2020, according to data from the German Federal Statistical Office. According to the survey, a lack of equal treatment has become the most significant regulatory challenge for German business in China, with a third of firms saying they have experienced unfavorable treatment amid Beijing's campaign for increasing technological self-reliance. Some 36% of the 596 German companies that took part in the survey by the German Chamber of Commerce in China last year listed preferential treatment offered to local companies, protectionism and legal uncertainties as their top business challenges, compared with just 20% last year. Of the German companies surveyed between October 14 and November 3 that had taken part in public procurement where a public body purchases goods, works or services from private companies, 42% said that they had been affected by preferential treatment offered to Chinese competitors. They reported a lack of transparency and so-called buy local policies, while they also have to compete with state-owned enterprises that have received state subsidies. Other discriminatory measures include exclusion of certain projects as a result of government procurement rules and requirements to establish a joint venture with a local company. Looking ahead, 55% of the respondents said the impact of economic and technological decoupling for their business in the next 24 months would be negative. More than 70%, though, said they would still look to invest more in the country, while 59% said their business in China was improving, and 51% said they expected an improvement in the development of their industry in China in 2022. Economic policy tendencies towards self-reliance seem to have left their mark. Lack of equal treatment has become the most significant regulatory challenge for German business in China. Clas Neumann. German companies in China are quite optimistic about the new year, and their commitment to the market remains firm, Clas Neumann, chairman of the German Chamber of Commerce in China, said in the report, released on Tuesday. However, economic policy tendencies towards self-reliance seem to have left their mark. Lack of equal treatment has become the most significant regulatory challenge for German business in China. China has been promoting its so-called dual circulation strategy, which places additional emphasis on domestic consumption and aims to boost self-sufficiency in high-tech manufacturing. This approach has raised concerns for foreign companies, and some fear they could be squeezed out of the Chinese market. Our member companies expect the Germany government to act on this and start a dialogue. Clas Neumann. In terms of investment in China, 24% of the firms surveyed said they were not planning to invest, or had planned to decrease investment, with 34% citing ongoing travel restrictions as a key reason, while 30% said politicizing business was another concern. China's harsh border restrictions prompted by the coronavirus pandemic have been sharply criticized by international business groups and have increased the risk of losing foreign exports. A total of 72% of German companies surveyed said China's zero-tolerance approach to the coronavirus that mandates quarantine and visa restrictions affects mutual understanding, while 56% said such policies prevent foreign investment, and 45% said the policies would lower China's economic growth. Of the firms that took part in the survey, 70% said they had production operations in China, while 86% employed fewer than 1,000 people. A total of 33% were involved in the machinery and industrial equipment sector, with 21% focused on the car industry. Our member companies expect the Germany government to act on this and start a dialogue, because indeed many things are not in the hands of business. These are sometimes political issues, or because there are certain agreements to be made. Therefore, we need the help of the government. That being said, there is also the Chinese government, added Neumann.